Have you ever wondered why banks earn a 35% profit margin while the likes of the manufacturers and wholesalers average just around 5% per year? Well, maybe it's down to sheer luck. That's not likely. Or maybe it's higher productivity. That's also not likely. But instead, the banks are doing something that the rest of us aren't doing at all. And they've been doing it for hundreds of years, and they're doing it on a $300 billion scale every day, and that's called clearing. So what is clearing then? Well, when you want to transfer money from your bank to another bank to pay a supplier, for example, the bank isn't actually transfer that money. So all these millions of transfers that are supposedly happening every day, they don't make them. So there are no cash transfers like that at all. Instead, they sit down with other banks and see how much do we owe each other, like all huge amounts of money. It's $300 billion every day. And then they net it off and just settle the balance. So your transfer is actually not happening. It becomes merely a ledger entry. And then they settle everything like this 3 times a day with one net payment. And that's very different from what you and I are doing in our businesses. Now, at Clearitt, we are offering the same advantages to you that the banks have been having for hundreds of years. So you can also skip doing the cash transfers, just settle things with a ledger entry and one net payment per week. And this, of course, is very beneficial. Average small and medium-sized business in Australia can save a lot of money. It could be even over $100,000, which could be the same size as your annual profit. And that, of course, means that you can have a boost to your profit margin, just like the banks. So what are the typical benefits to an average small and medium-sized business then? Well, first of all, you get much better control of your cash flow as, in fact, less cash has to flow. So that's more control over the business. And then, of course, you can do the payments in minutes rather than hours. You can simplify the accounting, the reconciliations, and the bills recording and such. No payments need to be made, maybe, so you don't have to chase your customers about payment anymore. Also, there are no transaction costs if there are no transactions, and the risks are dropping to the same extent. And then, of course, you get far less cash tied up in the business, and you can use that for other purposes, and you need less of the costly external financing of your working capital. And then finally, your forecasts become more reliable and easier to manage because you know already now that you can use less cash in the future, just like the banks do. They know already now that they can net things off, so they don't need to keep an extra cash buffer for that. So let's have a quick look inside our platform. So we can see here at the top the net cash flow for the week for a particular business. And we can see that it's a positive $83,000 that end up in their bank account on Friday. And that is if they get paid on all their invoices and they pay everything that they owe. Here we can see to the left, the cash balances that already have arrived. Some of them have been overpaid or underpaid, but there's still money in the bank. And to the right, we can see all the invoices, all the bills that you need to pay this week, and they are set to get paid. So here we can see all the receivables and payables that we clear for the week and will be settled without any cash transfers at all. And we see on the left there are $52,000 worth of receivables and $59,000 of payables to the right, and this will offset. So the only thing that needs to be settled is the difference of $7,000. And then there are a number of invoices that still need to get paid, and you actually have to pay, and they are still at risk of not getting settled this week. So these need immediate attention, and I'll come back to the ease of doing that. In the top right corner, we can see the total amount of the receivables for the week, and some of them are on track, all good, but some are still at risk and needs attention. And same story with your payables. You can see what is set to get paid and what still needs your attention. And here we highlight the total amounts that are still at risk for the week. It's only in the week, but we still have 44% of all the transactions that need attention. So a lot of work to do still. At the bottom here, you can see all your payables and receivables in tables under different tabs. So if we look at the first tab, you can easily see who has paid you already. You don't have to think about that anymore. And then you can see who overpaid or underpaid you as well. And you can just as easily see who hasn't paid you yet and what invoices are overdue. And you can remind them from here on the platform in bulk with customized emails if you want to. And then we have 3 tabs related to the clearing itself. Invoices are set to clear. This need approval from your end to do the clearing. And similarly, you can request approval from your counterparty so you can do the clearing. We have also made it easy for you to create invoices here, upload invoices, and download invoices. And we use modern AI technology to scan invoices. You can just drag and drop a PDF or an image, and we can pull out the information. And you can create invoices in that way too if you want, and send from here. So now we can go back to some of these benefits I mentioned before. We can see now how the reconciliation work is simplified. The payments are settled in bulk, the error-free bills recording, the less chasing of customers, and lower transaction costs. But there's more. On the forecasting page, we can see the cash flow for the upcoming 12 weeks. And the blue bars are your receivables, and the orange your payables. The solid blue and solid orange, that's the invoices that you can clear. And the more orange and blue solid you can see, the more you can clear, the better your cash flow, the less cash you need to run your business. In this case, this business over the 12 weeks can net off almost $400,000. And that's 24% of the cash need for this business. And the more you can net off, of course, the less cash you need. So your cash flow becomes much more solid when you don't need the cash. And that's, of course, what we want to achieve. And that's the way the banks operate. They know already now that they can offset the future incoming and outgoing payments, so they don't have to worry about it. And that's the target here. And now we can get back to more of the benefits that we looked at before. So now we understand that the more we clear, we reduce the counterparty risk, because your customers don't need the cash anymore to settle invoices with you. And then, of course, you also need to tie up less cash on your balance sheet, which you can use for other purposes and expand the business or go on a holiday or whatever you want to do. And you also need to rely less on external financing, like cash flow finance, like selling your invoices and such. And your forecasting becomes much more reliable when you know that you can offset a lot of them. Everything you can clear here, you can basically almost take out of the equation. You don't have to worry about that cash at all. And of course, overall, this gives you much better control and a much better overview of what's going on with the finances in your business. Okay, by now you should have a little bit of an idea how the banks are doing it, why they're earning steady 35% profit margins, and what they are doing different. And now you understand that you can do something similar. And you can go to our website and calculate how much we possibly could save you. And then if this is of interest to you, I think you should book a meeting with us as well, which you can do through the website. And then we can answer your questions and we can relate to your business. So the next time you get an invoice, you know already now that you don't pay it, you clear it. Thank you for your time.